Welcome to the Truthbombs Radar Report. This is where we cover the numbers and companies that are on our radar as we enter the week ahead. Attention traders. We are now entering maximum uncertainty zone. The government shutdown has left the Fed's dashboard with warning lights flashing and half the gauges completely blank. Next week is December's FOMC meeting, and everything revolves around Chairman Powell's tone. Let's look at the catalyst for the week. Let's start with the economic numbers. Well, first and foremost, we have to talk about it, right? Because the December FOMC meeting is happening on the 9th and 10th. That is the main event of the week and the last main event of the year. This meeting that everyone's waiting for. So it's going to be 2 days. First day, the FOMC members are going to convene on Washington, D.C., and they're going to eat lots of junky donuts and drink lots of really, really strong coffee because they're going to need all that sugar and they're going to need all that caffeine to stay awake because they're going to march through that meeting with a bunch of junior economists and senior economists and experts from around the world. And they're going to come in with reams and reams of paper. And on that paper is going to be everybody's estimates and expectations and forecasts for where the economy is going. And they're going to listen to all these presentations for the decision that they have to make on Wednesday. That's the 10th. And so we're not going to hear anything on the 9th, but on the 10th, we're going to hear what their rate decision is. Now, right now, there is probably a 95% chance that there's going to be a 25 basis point rate cut. This according to Fed funds futures and overnight swap rates. 96% chance of that happening on Wall Street. You all know that we consider that a pretty near certain thing. In fact, 55% probability is actually pretty good for Wall Street, but 95%, there's a really good chance of that happening. And given the data that we got last week, the employment data that we got last week, and all the data leading up to this week. So there's a pretty good chance we're going to get a rate cut. But that is not going to be the main focus of this meeting, right? It's going to be, of course, we're going to look very closely at the carefully crafted policy statement where we'll see if they put any interesting Easter eggs in that. They usually don't. Sometimes they do. We'll start with that, okay? But at the same time, guess what we're going to get? We're going to get because they do this 4 times a year, we're going to get the dot plot and the Fed's guidance report. Whew, that's the big stuff right there, right? Because we get to see what all the Fed members, each of them expects, where they expect the economy to be, where they expect interest rates to be. Oh, interest rates, we want to know what they think of that. That's the dot plot. They're going to tell us where they think the unemployment rate's going. So we're going to learn all sorts of things on what the FOMC members, the smartest, most powerful economists / bankers in the entire world. And we get to see what they think of where things are going to end up next year and the year after and the year after and even beyond, believe it or not. But of course, all of us want to know one thing, don't we? We want to know how many rate cuts on average we're expecting next year from the Fed. And we're going to figure that out. We're going to see that in the dot plot and in the economic forecast release. And so we get to see not only on average, but we get to see the dispersion, the central tendency, and all that great stuff. So we can prognosticate and we can come up with projections on where we think interest rates are going to end up in a year from today. Now, we all know that a lot of stuff is going to happen between now and December 2026. But based on what we know today, we're going to see what the Fed is expecting, right? If we look at futures is expecting 2 or 3 additional rate cuts next year, in addition to one that is expected next week and the week ahead. So, wow, we're already talking about next year. That's exciting. Anyway, the bottom line is that the Fed is doing this completely blind. as I said earlier. And so, there is still the chance that the Fed might decide not to do anything, right? Because they might decide, hey, look, we're in a data vacuum. We can't make a decision. Now, of course, I don't even want to talk about how the market's going to react if, in fact, that's what happens. But you can just imagine that there's going to be a little bit of volatility. So we're going to be looking very closely at that dot plot, not only where they think it's going to be, but where those dots are, that dispersion of dots, to see is there a lot of difference between the low and the high? Is it changing? And then people are going to try to figure out which dot is who, and we're going to try to figure out based on dovish versus hawkish sentiment. And so there's going to be a lot of great discussion around that. And we'll see if that dot plot is going to, dovetail into what futures and the markets are expecting. And so we're going to see a lot of volatility around that. There's no question. Okay. But typically, right? So we get the number, and a half hour later, the chairman, Powell, he goes out and talks to the press, and he has a prepared statement. And of course, that prepared statement is closely watched, and it moves the markets. It gives us a little bit more detail on how the Fed came to its decision, but really, 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 the main ticket, the main show is when he starts to answer questions. He's a very careful guy. He selects his words very, very carefully. However, he has been dropping some Easter eggs for us. In fact, the last FOMC, post-FOMC presser, he is the one who actually changed a lot and actually caused markets to really be under significant pressure for several weeks, because he reminded us that this December, we're here now, next week, FOMC meeting is not a given that we're going to get a rate cut. He said that to the market, and the market pretty much freaked out. And it took a while for the market to get its feet back. 3-4 weeks. It took the market to get its legs back after that. And so, we're going to hear what he has to say about not just how they came about this next decision. And people are going to ask, but they're going to surely ask, what comes next? Are they paying attention to the employment situation? Are they worried about inflation? Are they worried about tariffs? Oh, more importantly, probably, does he feel pressure from the president? Who does he think? What does he think of his successor? Is he going to stay on board? People will ask those questions. He will not answer those questions. Guaranteed. He will have a stock answer for those. We're not going to learn anything from him on that. However, it'll be interesting to see his body language, and people will try. God bless the journalists, because somebody has to keep the guy honest. And they're going to be out there trying to keep him honest. But I can tell you, he will tell us his opinions on what he thinks might happen next year. And that's the real stuff that's actually going to move the market. We're going to want to hear, is he paying attention to these numbers that I talk about all the time, saying, Fed, are you listening? Fed, are you listening? Right? Because I'm certainly perceiving a little bit of stress around the edges. And I hope the Fed sees that too, because they need to act proactively, not reactively, right? Because once the labor market starts falling apart and consumption starts to fall apart, all that stuff, it behaves really well until it doesn't. And so we're going to have to see exactly how that falls out next week. And it's finally going to come to a head. We're going to see. And so that's going to be the main attraction of next week. But there are going to be some other interesting things, right? So while we're talking about interest rates, right, there are going to be some pretty important Treasury auctions next week. And so we're going to see a 10-year auction next week, right? The 10-year is now considered the benchmark, right? It used to be the 30-year. Now the 10-year note is the, let's say, unofficial benchmark of interest rates. And that gauges where the market is expecting inflation to be in the far future. And they're sort of making estimates on what's going to happen with Treasury issuance in the future, whether the deficit is a problem or not. All those things, the risk premium, all that stuff is sort of tied up in where those 10-year yields are. They've been quite stubborn, right around the 4% level. They closed the week out up at 413. I'm looking at it right there. It's up a little bit on the week. It's pretty interesting. And so when we do these auctions, it's very interesting because we like to see what the interest is in these yields here, right? So are the buyers of these 10-year notes expecting that they're going to go down or go up? And if they expect that yields are going to go up, as many people suspect, then you're going to see weak demand for that 10-year note, right? Because you don't want to buy something that you're going to lose money on, or you can get a better yield in the weeks to come. So that it'll be interesting to see how the market reacts to that. And that is always a very interesting telltale sign. And nerds like me who have calculators like this is an old bond calculator, will be watching those auctions, right? Because that is very important. We've been talking a lot about the potential for yields to go higher. There was an interesting BlackRock article out last week. I wrote about it. I did some videos on it. I talked to Vonnie Quinn about it on Bloomberg TV. It was a fascinating discussion. You should check out our video, not only on our homepage, but you should check out my interview with Vonnie Quinn. Vonnie Quinn is awesome. And it was great to talk to her after these many years about bonds, where I got my start many, many years ago in 1991 on Wall Street, back in the early days. Anyway, that said, we are all concerned that yields are going to go higher because of record Treasury issuance to cover the deficit, and because AI companies, the hyperscalers, are going to be hitting the bond market to raise money to build out all those shiny data centers. Check it out. Interesting stuff. Let's talk about economic data. There's not going to be a lot of economic data next week because there's still a backlog of data that we're waiting on. Interestingly, if you look on my Bloomberg terminal and you look at what what we're going to expect in the week ahead, and I also want to remind you that I do drop on Mondays, every Monday, the weekly economics calendars and the weekly earnings calendars, right? So you need to check in on Mondays. First of all, check on our homepage. We have a lot of links to that stuff there. There's always stuff going on, and you need to know about this stuff. You want to look smart. You want to be smart. You want to be ahead of everybody else. You want to be the early bird that gets the worm. You got to start with knowing what to expect this week. And you're watching the radar, which is a good sign. But if you want to just show up and download a calendar, check us out on Monday. We're going to be dropping that. We drop it every Monday, as we have for many, many years. But we're going to drop it again next Monday. But if you look at the economic calendar, you're going to see there's a bunch of data numbers there that we may or may not get next week. And if we get them, great. But I'm going to be honest with you, those are already old numbers. So we like a little bit more current numbers, but we never know what we're going to get. But what we may get next week is we might get the JOLTS job openings numbers. And JOLTS numbers are important because we get to see if there are more job vacancies and how people are filling. Is the labor market slackening, or is it or is it flush? And that's extremely important, but that's somewhat of a laggy number, but it is important. It's typically a sleeper number, but we have been watching it lately. And in this market, when we're not getting any data and the Fed is flying blind, and we are flying blind with the Fed, we'll take anything we can get. And so we may get the JOLTS number. It'll be interesting to see what comes up with the JOLTS number, to see if it jibes with the ADP numbers, which I have been harping on a lot lately. Of course, we're going to get the next week of the ADP NER Pulse. That's a private number that you won't probably see on many calendars. You won't see them talking about it on the tube because it's just a new number, but it's such an important number. And I talk about it all the time. And so you are going to check it out this week. You will come back and you will check it out because we will tell you when it comes out. We're going to tell you how it comes out because it has been very predictive of what is going on. And it's a very timely number. It's a weekly number. And so we're going to get the ADP NER Pulse next week. We also get another sleeper number that I don't report often, but because we're still in somewhat of a data desert, we get this NFIB Small Business Optimism Index. Again, you don't hear about it often. It comes out really, really early in the morning. We report on it sometimes, but on a quiet week, we definitely will be watching that number, right? This is a private sector number. And it's really because it's small businesses, right? So small businesses make up the bulk of the bottom end of the, I don't want to say the bottom end in terms of negative, but they make up the bulk of the base of the economy. So clearly we want to see how optimism is in the small business sector. And of course, they are highly sensitive, hypersensitive, in fact, to rising labor costs and borrowing costs, right? So we want to see what happens, and we'll be interested to see how that plays out. And of course, that is very, very important. Now, it is a FOMC week, right? So that means it's in a data blackout from them, right, as well. So we won't really hear from FOMC members. We don't know. Sometimes we'll get some at the end of the week, right after the FOMC meeting. We can hear from non-voting members, but we most likely will not, right? Because it's going to be a pretty quiet week in terms of what we hear from FOMC members. I want to talk about my 5 stocks to watch this week. I'm only allowed to talk about 5 because my producers say I'm only allowed to talk about 5 because, I could talk forever. But I want to remind you before I go over that, if you like this kind of content, do us a favor, click like and subscribe. We do a lot of videos during the week. You should really know what's going on. You need to be in the loop. This radar is an important place to start. We're glad you're watching it. But as these numbers fold out over the week, we're going to be dropping bomb blasts on you. And we also have our daily videos, which we put out. So you know what's going on and what is in the mind of Wall Street for the week. So if you want to know what people who are in the business, who have their sleeves rolled up, doing this stuff every day, what we're thinking, watch these videos because you're going to know. And we're going to tell you. We'll drop them here first. That's what we do. So what are we going to watch this week? Well, we got some interesting earnings still. Earnings season is kind of over, but it's not kind of over, right? Because we have some important numbers. Number 1, Broadcom. We've been hearing a lot about them. Wall Street darling. Been on our radar for a long, long, long time. And now they're caught up in the AI tornado, if you like. We are looking to hear from Broadcom this week. We're going to hear about their earnings this week. We want to watch very, very closely what they say. They're interesting. We had some interesting news. I forgot already at this point whether it was last week or the week before, all about Meta using Alphabet's chips for AI in competition with NVIDIA. That was an older theme. And of course, Google is not a chip manufacturer, but they have chips. Who do you think they make those chips with? Well, they partner with Broadcom. Broadcom is a diverse chip, a semiconductor giant. Their strength really is started out in communication chips, but they are pretty diverse and they're a great company. They used to be a great growth stock with a yield, right? Because they have dividends, but the stock has run up so much. Their dividend yield is less than 1%, but at least they'll pay you for taking the ride. So we're going to see what they have to say. And it is definitely going to be looked at. Their guidance is going to be looked at as a sort of barometer for the broader semiconductor space that we've been watching very, very closely lately. We got Marvell in the past week, and that was a positive number. And we also got some disappointments as well last week. So let's see what Broadcom says. Hopefully something positive, right? We like that. We're also going to hear from Oracle. Oracle is not your grandfather's and grandmother's Oracle. Oracle is a database company, but they're not a database company because they are on the forefront of pretty much everything and always have been. They're in the cloud space as well, and they have proven to be, now that people are paying attention, they're actually providing cloud services to many of these. They're almost you can call them a hyperscaler even, right? In a less traditional sense, but it is everyone is looking to Oracle. It's been a pretty volatile stock lately. They had a great run up earlier. So we're going to want to know everything they have to say about their cloud spending. You remember these themes, their infrastructure, all that kind of stuff. We want to know what's going on. And of course, Snowflake, which is sort of in the database space as well. And they also announced last week, and they had really not great guidance, let's say. Then we want to see, obviously, are we going to get more information about the space from Oracle? So Oracle is going to really determine a lot next week. So we got some pretty important AI-based companies, Broadcom, Oracle, that's another one. Let's go into a company that's not going to announce earnings, but we're going to watch them carefully. JPMorgan Chase, they are the sort of bellwether of banks, and what we're going to watch, they're highly sensitive to the yield curve, and the yield curve has been moving around a little bit. Like it's flattened a little bit, then it steepened in the last minute of last week. But basically, it's the tension between front-end rates, which are front-end yields, which are sort of influenced by the Fed and the FOMC, and the back end of the curve, which is influenced by the markets and what the markets are expected. And we saw a little bit of run-up in 10-year yield at the end of last week, as I pointed out earlier. And so what the FOMC says is going to have an impact on JPMorgan Chase's stock. So we're going to watch JPMorgan Chase's stock next week, right? Because at their core, they make money. In net interest margin, which is really sort of it's highly influenced by the slope and the shape of the yield curve. And we're going to look at the dot plot. We're going to know where we think yields are going to go over the next year. It's going to impact where we think the yield curve is going to go, and of course, how profitable JP Morgan might be next year. Caterpillar, I'm watching Caterpillar, right? There's so much about Caterpillar that we want to watch. I just want to say before I get to Caterpillar, I forgot to tell you, and I like to tell you this all the time, JPMorgan Chase will pay you 2.27% in dividend to take the ride with them. Just want to remind you of that. Caterpillar, let's talk about Caterpillar again. Industrial giant. And so Caterpillar would be a proxy or a bellwether for industrial, right? And cyclical demand. And we've been monitoring very carefully this rotation into more cyclical industrials. Last week it slowed down a little, but the weeks prior you saw a lot of moves going into into these types of stocks. I like to look at Caterpillar as that because Caterpillar also has a very big international presence. And that also gets pushed around a lot when you talk about international trade. So Caterpillar will be one of the stocks that we will be watching, that will be on our radar in the week ahead. And again, we talked about manufacturing weakness that is only increasing. We're talking about recession fears. All this stuff is going to impact Caterpillar. So if you want to see how the market is responding to the negative economic events and numbers and international trade tensions, Caterpillar is a good company to watch and see how they trade and see what people say about them. Johnson & Johnson is also on our radar this week. It's a large cap stock. It has a dividend yield of 3%, a great company. But we also want to see, we're watching them for this rotation, right? It seemed to benefit significantly by this rotation. It is a safe haven type of asset stock. J&J is, and has a good dividend yield. So you would expect to see if the cracks in the labor market, how investors are going to react to that. And of course, that is something that we're going to be watching very carefully. I know that seemed kind of boring, right? Because we're kind of out of earnings season, but don't worry, we'll be back in earnings season soon. And I didn't want to push the same stocks that everyone is watching, which is, the usual suspects, right? And we're watching those too. So you make sure that you check back with us often, because we will be talking about these stocks over the week as the Fed does its thing. And if we get any timely information from any of these companies, any of these stocks, and in that case, I'll show you more than 5, if more than 5 come up during the week, right? If you like this kind of content, click like and subscribe, because we drop a lot of this every day, and you want to be in the loop. And you get in the loop and you know what's happening on the radar by clicking subscribe, because you don't have to wait till the weekend to listen to me rant for a half hour about it. You get to hear them in little bits during the week as they happen. Click like and subscribe. So the Fed has a choice. has to choose between what is a slowdown data, what is saying data, we're slowing down, and what is saying, is this bad? Is this good? Is it stubborn PCE? It's all the stuff that has now been put into what I like to say a big shaker with ice, and it's being shaken up, and it's going to be served next week. And Powell, bless him, is going to have to thread the needle with all of this crazy cocktail that is being shaken up right now in the market shaker. So the question is will he be able to thread that needle, or will the market do the rate cut for him by pushing us, by pricing in a recession? It's going to be a very, very interesting week. It's going to be a busy, busy week. It didn't look like it by the data that we're going to get, but I can tell you it's going to be very, very busy. So pay close attention. Stay nimble. So this was your Truth Bombs radar. And now you know what to look forward to in the week ahead. Just make sure that you fly straight and check back in often. Join us every day for Wall Street Truth Bombs, where I drop them here before the market figures them out.